Gap alert. How many people are familiar with trading gaps? Currently, future prices are showing a potential large gap over 100 pips on Euro USD, obviously caused by the no vote referendum by Greece. And everybody knows what to do? Yep. A few questions, so we'll get going. Anyways, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers not just Forex, spot Forex it is, but also Forex binary options. You could also trade things like metals, right? You like gold, you like oil, it's all there. Stock indices, Nikkei, DAX, Dow, S&P 500, all that kind of stuff. It's all available at TradersWay.com. I'd like to thank you for being a client. As you know, this event is at forex.today. This is a special webinar, and I threw it together at the last minute because I'm sitting there smoking my cigar, reading about balance of payment and current account of various countries, and then I got my cell phone going on in the background, and boom! I'm hearing there's going to be a no result on the vote out of Greece. And I said, I got to get my team together. And here we are. So let's get going. I'd like to remind you that trading and investing is risky, not appropriate for everyone. However, your past performance, good or bad, never is indicative of future results. But always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So we'll watch the market actually open. Now future prices are indicating an open at 110, but it could be significantly different. In fact, all right, I'm reading 109.99, but there could be a ton of orders that get triggered into your banking system that take it even lower than that. With about 4 minutes to go, I believe, because I can't see what you can see, but I believe you have a question on your screen that says, what will be the price for the Euro US trading? So in about 3.5 minutes, or four minutes, it'll open. Are you able to type in your guess at the price? Never did this before, so not sure what the result will be as far as me being able to see your answers, but I'm hoping you can actually type in an answer versus me just giving you a multiple choice or something. Is that the case? Are you able to type in an answer? Cool. So go ahead and do that now. There's no prize. As you know, there's only profit and loss in Forex. So there's no glory. Right? I've seen traders that have 90% accuracy rate, but they only make $500 a month, and then you see another guy that has a 60% accuracy rate, and he makes $5 million. So remember, there's no glory. There's only profit and loss. So type it in the area. It looks like 18 people have done it, and other people are still logging in. So it'll be interesting to go back to that. Let me show you what I'm looking at here. You should be able to see my charts, and I got the 1 minute so we can spot the gap. Now, traditionally, what you do is the market, let's say, closed here, and let's say it opens here. And traditionally, or in let's say a relatively normal world, what it'll do is, let's say it drops, that's the gap, and then price will kind of back for a while, fill the gap eventually, and then move on.com. This is, I think, a pretty unusual, unprecedented situation. This isn't like a geopolitical event that occurred over the weekend, but this could be the beginning of of a country exiting a currency, and there's really in the modern world, let's say, there isn't. So let me get give you one piece of advice. You're not going to listen to me anyways, because what you're doing is extremely risky and unusual. So the market could do this, and just kind of, it could just keep falling and never fill the gap. And it could move, 50 pips in a minute for you or against you. And just be aware that this is, again, this isn't a currency trade, right? This is something new and unique. So be careful, all I'm saying, okay? And the way that the world reacts at the open isn't necessarily how they're going to react the rest of the day. So be careful. Take a look at the survey. And whoever developed the survey doesn't really give me a... Oh, I said I can go through one by one to get an answer. Some people said it'll open up at 108. All right, so it's not the world's greatest survey software. A lot of people are saying 108. Cool. Well, thank you for participating. Let's see. I think if I click share results, it's not going to do anything, right? No. All right, stop sharing. Let's go to the market. It's going to open in about 30 seconds. So, and just be careful. The traditional move is it'll drop, let's say, and it'll probably drop a little more. Let's say it could drop another 100 pips. We don't really know. And then at some point, there's a lot of traders that will counter trend it and will perhaps come back and fill the gap, but it doesn't have to do anything it doesn't want to do. It could fall forever. Just remember that. Stay calm, stay focused. When we talk about patience and discipline, this is the type of event where it comes in. Okay, so we got it. Right now we're looking at 109.80. Okay, off of what was reported, which was 109.99. So what is it? 109.67. So our gap here, we've gone from 111 to 109 and some change. Okay, so there it is. As expected, just over 100 pip gap. So the world isn't freaking out yet, and nor is the world really, assuming this is the, the actual end for Greece and the Eurozone. But people do need to rebalance their portfolios. This is a real event risk. So the gap. I think it'll be interesting if we mark the gap area sort of in a pale pink linen. We'll just kind of keep an eye on that. So, like I said, the general gap theory would be eventually, let's say it worked its way up. When is it going to happen? In the next 5 minutes or in the next hour? Well, we don't really know. But, that would be sort of how it's taught in the textbooks. But let me be clear. An exit from the euro is not in the textbooks, is it? So Kenny Chung, you threw in an answer of 109.83. Hey, that's not bad, right? It's hard to see. What is it? 109.86. I thought it was a little lower than that. All right. Well, there you go. So you got it. I'd say that's precise. Okay. One good thing is it doesn't seem like the world's freaking out, is it? So let's back out here. And let's see what other type of information we can add to our charts here. Oh, I got a fib going on somewhere. Let's kill this fib. That's not it. It's this one. Less is more, isn't it? Okay, so a couple of things. You know, the world freaking out. Well, the predicted low for the week is down here, 108.67 is the competitive target for bears. So, you know, it could fall another 100 pips pretty easily. And then the predicted low for the week, the aggressive predicted low would be 107.88. And so we're nowhere near that, are we? So that's good. Traders and investors have had time to, you know, prepare their portfolio. Also, if you see here, this is last week's low. It's right around 109.50. It's a weekly support. It's a midpoint psych level, and it's yesterday's low. So, you know, if I were to throw in a guess, right, here's what I would guess, even in a sort of a normal market. We're down here now, as you can see, at the price level. Let's say it comes down, you know, it's not even 50 pips. Let's say it comes down another 50 pips, and then maybe tries to come back and retests. Maybe it doesn't close the gap completely, but maybe like retest 110, kind of half fills the gap off of this area. Let me zoom in just in case it's hard to see. I'm trying to get all this data in there, and it's not that easy. Maybe use a 4-hour, zoom in a little more. Okay, so like we have these areas here. I was saying this one, the actual double bottom would be off a midpoint psych level around 109.50. And an interesting resistance level would be up in here, 110.50. So if things would react here, since it's not freaking out, what wouldn't surprise me is if it came down a little more and then came up, we'll call that a fill the gap scenario, and then maybe continue mission even lower. Okay, it's plausible within the realm of, you know, hey, I've seen it before kind of thing. Okay. In this case, oscillators are probably not very useful. It's going to move probably a little too fast for even an oscillator. My stochastics is extremely fast. Well, ain't that fast. So here we're working our way down, and I'm eyeballing this area here around 109.50. Let's change the color on that to like darker than that, lavender. Seems so pretty. Okay. So it'd be interesting if it was down through Asia and then London boys take it north. I'm not saying that'll happen. We have a lot of candles before it happens. Good morning, Mark, or good afternoon. Boy, it's sure good that the market isn't freaking out. Isn't that good? Because if the market freaking out would be extremely high risk. Luckily, people have had, what, 2 years to prepare for this? So this drop here is a move of about 1.10%. Well, it's better than a 10% drop, right? Or a 5% drop, or 3. So really, a change, a net change of one isn't the right. Well, Mark, in regards to the ECB, I can't really tell you because, again, I don't have a precedent, you know, if they're going to directly talk about Greece and do things for Greece. Who knows? There's that. There's the Greece question, and then there's the question of the Eurozone. And the ECB isn't in the business of really taking an insolvent nation, or let's say not nation, central bank, because they deal with central banks. It's not in their mandate to bail out a bank, a central bank that's insolvent. Right? Have you seen that anywhere in the mandate? So it's really up to the people and the central bank and the government of whether they default or not. And if they do that, they're gonna, the consequences that they put themselves in a situation where if you were a nation, independent nation, a sovereign nation with its own central bank, you would simply offset this giant, black mark on your record by devaluing the currency. I mean, the ECB is already essentially doing that to create inflation, right? But just not enough for Greece if they're defaulting on the, right? So, what do they do? Well, they start printing drachma, I guess. But that's not up to the ECB, is it? Look, Italy was in serious trouble. Portugal was in serious trouble. Ireland was in serious trouble. Spain was in serious trouble. Those countries are in reasonably okay shape now. Ireland, for example, was in a really bad situation, but they had a really good finance minister and they had a really good central banker, and they very quickly turned that country around. And maybe Bono bailed some people out. Who knows? But I don't see Portugal and Ireland and Spain and Italy. I don't see major problems there. So if the Greeks are a special case, I guess. So what's the ECB going to do about that? Well, they've done everything they possibly could, right? Hey, Paul. All right, so an aggressive counter-trend trader would probably be buying the Euro USD right now around 109.88, right? And their stop would be here. Right? You said that? You have very little to lose, and who knows? Who knows what happens if you're going north? Fill the gap, beyond the gap, don't know. But you do know that you're risking 88 and your stop's where? 77? 75? 70? Right? Okay. It'd be one of those things where you jam the stop if you can, if you're lucky enough. Let's say it goes back up to this 110 area. You jam your stop. Others might want to sell it to areas, where the 110.50, I think, will be an interesting place as well. And just above that is yesterday's low for shorts. But we're not really at those levels. Watch the 110, but I only say that because of the psych level. Those that want to be short and take this down to parity, right? They're going to look at key psych levels. And the interesting thing about psych levels is everybody has it, right? Everybody knows that that's 110. We can debate on, fib levels and wave counts, and is this in a channel? What about that trend line from 1977? You know, there's all kinds of complexities that individual market participants will add to their, you know, their analysis to, you know, their alpha. You think it's going to do this, and you have all these reasons why, but everybody knows that that's 110. That's that. So here we are. It's already moved up to 95 from 88 just a couple of minutes ago. Is anyone actually trying to fill this gap? Is anyone preparing to sell at 110? What's going on? Talk to me, Goose. You're trying Euro USD. What do you mean? Are you buying it right at the cycle level? It's at one. It's at 22. Even though I'm only showing you Euro USD, I'm looking at a lot of different charts, guys. You know, one interesting one is Aussie dollars below 75, and we know that's a, you know, that's a red line in the sand. Well, there you go. Back to 88, but somebody's taking the cycle level. That's somebody's pullback. What do you think? Down to 109.50 and then find some support? That's why you got to have plans, guys. When I said at 88, where are you going long? Well, then you knew your stop was at 70. What's the big deal, right? 70, 75, I mean, you're risking about 10 pips. That would be your shot, right? Now, for someone else, for the bears, well, I can't get rid of that. There we go. For the bears, maybe down to 109.50. If the velocity picks up, my next level is going to be 108.70-ish. 108, we're at 110. Holy smokes. So just make sure it's a trade you would be proud to share with your children. Guess what Daddy did today? I took your college savings fund and I shorted the Euro USD at 110. I'm really happy that the market's not freaking out, because that's the stuff where, you know, end of the world type stuff, right? Like, what are we all going to do? So let me ask you again, is anyone shorting this? You're waiting to break below 75, huh? Suppose that's fine. You're throwing away 25 pips, but I'm looking at a dollar index, and the dollar is fairly strong. I do see that USD yen is back above 122. Oh, and it just did a big move right there. Yeah, yen just weakened pretty quickly right then and there. Boom. Aussie USD below 75. Been waiting for that for a very long time. Well, one way to trade it, if you're looking for something a little different, you could short the Euro USD on the cash. You're a bear, and then you can long it with your binary option and reduce some of the risk. You know what I'm talking about? So you can long the derivative and cash and short the cash. Well, see, that's the thing, John. There's lots of guests that can be thrown into the ring, but you're asking me to say, how have the majority of market participants, because most of the market in equities and other markets are institutional, right? So, have they prepared for a Greek exit? I don't know, and I wouldn't want to throw down a guess. When it comes to normal market conditions, I can talk all day about global macroeconomics, likely central banking responses to global economic situations, things like interest rates and credit risk and this, that, and the other thing, and put together a really logical and intelligent strategy that would likely stand the test of time. But when you're in uncertain markets and uncertain circumstances, in unprecedented situations, it's a lot more difficult to say, which is another way to say, you know what, it's risky. So, what's going to happen to the stock indices? Well, if we were talking about, is the ECB likely to continue with quantitative easing? I would say, well, yeah, and that would be good for stock, right? So, would a default be good? No. So, if anything, I would assume the dollar is going to get nice strong, right? Better trade euro yen. Another good situation, absolutely. I would look at that. The Japanese yen is typically a safe haven currency. The market might already be heavily exposed to dollar, but keep in mind over the course of the next, let's say, year, most market participants would want the yen to weaken, so they want the USD yen to go up. Japan would, is usually benefits from a weaker yen. And the reserve currency typically strong, especially in a cycle of raising interest rates, which we are about in the reasonable near future. So I don't mind sticking to that. Well, so EB makes a comment, and one way to discuss what we see here is that this isn't the end of the Greek situation. So there's more to come. And if EBB wants to keep Greece in there, they're going to need help. And, what's the IMF going to do? Well, it depends on what kind of deal they cut with ECB. Like I said, at this point, Greece doesn't want to pay their debts. That's up to Greece. If they want to default and the ECB still wants them in, well, then the ECB's court. And they're going to need the IMF's help. And depends on who will be hurt the most. And from the Greeks' point of view, I suppose, it's that they're damned if they do and they're damned if they don't. So they might be in control of their own destiny. All right, so here, moment of truth, will it make a little low? Let me zoom in a little bit. So I might throw in a binary long if we get a 5A cross up, which is another way of saying if this forms a bottom, because it's supposed to make a lower low, right? Whoever shorted near 110, they're eyeballing 109.50, I would say at least, right? 109.50, 108.50. So if it failed here, that's going to say, well, there's very little conviction on the bearish side, but selling at 110. Again, bare minimum 109.50, but much more likely 108 would be what they're expecting. Do you agree with that? Do you think large institutional investors are trying to pick up 22 pips? As a sort of an academic point of view, it'd be very interesting to see how an economy removes itself from an economic union and returns to an independent currency. I mean, it would be a textbook moment. How do you do it? How long does it take, but what mechanisms are in place? Obviously, they don't actually print the money. You just pump drachmas, which are nothing more than ones and zeros on a computer screen, right? You pump them into the bank and convert them at some whatever value. So you say for every €1 in your account, we're going to give you 100 drachma or something. And all of a sudden, that's in your bank account. But they didn't have to print anything. But eventually, they'll have to print a currency, like actually not money, but a physical currency. What do they do? Do they keep? Is there 100 trillion drachma currency sitting around somewhere, or do they have plates? How long does it take? What does it cost? Because they had to buy the stuff to put the money, no one would lend them the money, and they wouldn't want to accept the drachma. So it's very interesting. Yeah, okay, so EB says, I personally don't believe that they would or be allowed. Okay, so on that point of view, Jan, I think it's a very interesting intellectual kind of conversation here. It's if ECB doesn't allow them, well, what does that mean? Does the ECB have an army? The ECB police are going to come in, start knocking on doors in the middle of the night? We heard you're using drachma. I mean, so wait, what do you mean not allowed? All right, so technically that's a low. It's not incredibly dramatic, but we are at 73. Somebody said they were going to pull the trigger at 75. I think it was 80. Did you do it, David? The dollar's still quite strong. Very nice. Okay, we're moving along. So remember, 150 is what we're eyeballing. Interesting, not necessarily because the midpoint cycle level. If we're heading down, we're heading down, right? It's more interesting because it's last week's low. I can't fit it on a 5-minute chart. So, but there it is. So now I'll zoom back in. Oops. Okay, last week's low. And then the midpoint cycle and the support pivot, support 1. Okay. Yeah, the drachma drama. By the way, guys, thanks for logging in today. I know it was pretty short notice stuff. I just didn't want to be alone. So to put all this in perspective, guys, I've traded in markets where each one of these candles could have been 50 or 75 pips each, like per minute. So it would like rise 100 pips in a minute and then down 40 or 50, then down 40 or 50, then down 100, then up to whatever. So this is just very, I find this very stress-free. I've seen, and this is nothing, which tells us that the market has been prepared. Nobody's terribly surprised. And currently, I would mark these two areas if I were me. I would mark sort of that could be important in the future. Let's take this old area here. Okay. Could be interesting again, price action wise. And if it came down, hit 109.50 and came up one of these areas, might be interesting to bring it back down to at least double bottom, right? A bear might try again, so to speak. Yeah, EB says 2002, 2006. Like what you're looking at now is what the Euro USD dropped from about 111 to, let's say it moves down to 109.50. It's not a lot of pips. To put it in perspective, 8 years ago, let's say, non-farm payrolls would have moved more than this. So, yeah, it's nothing. I'm good. I'm happy. Just wonder what the next question is, right? Oh, well. Has there? I haven't even seen. It's kind of a weird time of day. Has there been an official response by the ECB? How long will it take? Another interesting. So they've defaulted here, but they've defaulted against whom? Just the IMF, I think, right? Thank you, Paul. So kick the can down the line. All right, so there's a little tickle here. This is going to be interesting because it's going to dictate how traders are paying attention to these price levels. Okay. So I know that it's hard to see. It's just where we're zoomed in so much. All I'm watching is this level, really. So for example, if we went back above 110, let's say it did this, and then this above 110, I would assume some sort of gap fill. And like I said, I don't think 111. I wouldn't be thinking that now. I mean, it could go all the way to 112 because everyone says, "Oh, well, Greece won't be there." I don't know. But when it comes to the gap, I would say the conservative gap would be 150, sort of up in here, and then I would just again be prepared to reevaluate. Right? I don't want to go in bullheaded and ignoring the obvious. Right? So trade the price action is what I'm looking at here. So 1 minute 5-day cross definitely confirmed here. Back to the 80s. We're higher than where we start, down in here. We're very nice. Some will probably fib this gap. Let's fib the range here. 382, the range is going to be 110.20. I still kind of got this 110.50, yesterday's low about 60. Could be very interesting. I forgot to do a binary. Do a binary? Is it? One trick is I always like to refresh a lot. I don't know. Any online platform I like to refresh a lot. So 22, that's the top of the hour. Do you think 20 minutes from now will be higher than current price? Right? You could do it like this. Right? It's predefined. Certain amount of risk is all built in. When I do that, I typically move in and want to throw down, watch a binary option chart. So I do that. I go to Euro USD binary it's the same Euro chart now includes my binary option trade, which you can see there. Cool thing about a binary option is I don't have anything to manage. It either goes up or it doesn't go up. I either make money or just it costs me that. Well, EB says gaps are meant to be filled, only a matter of time. I would say it differently. After staring at my charts for 10 hours a day for 10 years, I've seen a lot of things. Good, bad, ugly, crazy, frightening, all kinds of situations. And I'd say when it comes to gaps, I'd say most of the time they fill to some degree. Let's say at least a 70% fill. Sometimes it's 150% fill. It fills and then keeps going. But it doesn't always fill. This idea of time, well, if you're saying, Wayne, 3 months from now, price is higher than 109.80, that's not a gap fill. That's just market participants, and the market itself is done. It's changed in a dynamic way. The price is going up. That's not the filling. But if the gap is going to fill, it needs to start its process like in what? Should start the process in the next hour, and should do what it's going to do, in the next 12 hours, kind of thing. Today, certainly. But I wouldn't paint myself in a corner saying it's only a matter of time to fill. Well, you know what? I have seen times when it doesn't fill. There are times when this thing drops, and you know, 110, which we've touched twice now, or almost, right? That's what they're doing. This area here, right? That could be the high for today. And then we'll come back and say, oh, well, EB told me it has to fill. No, I've seen situations like that. Not typically, but I would just simply pay attention to key levels trade section as you've been taught. Stay calm, stay focused, that kind of stuff, and let the other ones gamble it, right? So if you want to long it, you can do what I did with binary, because you only have to be a little bit right and you'll be fine. Or wait for the price action like this, because then we could see the higher high with a higher low. To me, that would be a very focused trade. One, let me change. That's just so ugly. We can do it like this. You can say one, it's a gap fill, right? You're explaining it to the judge and jury why you took the risk, right? It's a gap fill strategy after the open, right? Then you got a higher high. So therefore, you set up a higher low 1, 2, 3 type thing. Long, and then your stop would just be again just lower than the low, and you know, all that kind of stuff. And you say, well, Wayne, I was watching the gap fill, I got the scenario, it made the high, I waited for the pullback, I longed it here, and I was risking, you know, this much, which was, you know, risk for likely reward. Does you had the strategy first, and then you got the technical setup. Okay, and then I'd say, okay, well, that makes sense. Unless it does it, don't do it. All right. Now the binary is a binary. I don't need any of that because everything's predefined. Right. Now, obviously, like I'm just throwing that in as an example. So low risk, low reward, but whatever. You should, even with a binary, you should, let's say, wait for a double bottom to produce, right? Or wait for the higher high to produce, especially over a cycle level or something like that. You should still use technical analysis properly, whether it's derivative or not. Okay. So I'm a short. Let's say you immediately shorted up in here off the cycle level. You can immediately long the derivative and reduce your risk by 40%. That's another way of playing it, and that's what we're, you know, how many times have I done a video on that? You know, go to youtube.com/c/TradersWay, and I must have done 5 videos on that, right? Okay, so let me leave you with one last piece of advice, because it's already been an hour, right? So I find if I stay here too long, I'll stare at this forever and nothing will happen. So by me leaving, finally something will happen. So here's my thought. We have the gap down. We had the little micro test. It produced a low, and this kind of looked like a higher low still, right? There's nothing bullish here at this point. So again, mark your cards. So let's count this as a high, lower high, lower high. I would technically, even on this 1 minute chart, I would stay a bear until it made a higher high. And then I would still look for a higher low, and I would trade this with nothing more, like no predefined notion of what it must do. Notice how my language here, keep trying to remove that thought process. Be a cork in the river of Forex. It's going to do what it's going to do, and it doesn't give two hoots of what it's supposed to do. This is people rebalancing their portfolios. This is real risk. This is real money. This is not a video game. There's more to it than little lines and squiggly, stuff. Portfolios need to be rebalanced based on new information, and it's an efficient market, so it's going to do it. So I would stay price action trader, at least till New York. Okay, it made a drop that's bearish, came and tested a cycle level and dropped, that's bearish. Try it again, that's bearish. Now it hasn't made significant lows, but we know there's some pretty reasonable support just below here. So whether it flips back up here or down at 109 or even 108.50, you still, before you can be a bull, you still need a reversal pattern, okay? That's my advice to you. I wouldn't go long until it made a higher high, higher low, okay? And then I would stay bullish on a 1 minute or a 5 minute, thinking that maybe it fills the gap, maybe it gets to 110.60, maybe. But you'll stay that way as long as it's making a series of highs. Okay? And I think it's more than reasonable here, guys, that this can go down to 109.50 or 108.50. This could make lower lows, lower high, lower low, lower high, lower low, just indefinitely. Okay? So when we talk about patience and discipline, I would use this as a situation to really practice your patience and discipline and focus trading on price action specific. If it make a lower low, next trade is probably going to be a Fibonacci retracement, or just eyeball where the 50% mark is, and very conservatively allow it to work its way down until, let's say it does this, it double bottoms and then it makes a higher high. Then you consider, a change trend, right? We're only talking about a 1 minute chart or a 5 minute chart. These are pretty short-term trades. It's going to do what it's going to do, and you don't want to get to say this is a test. Patience and discipline. Is that a yes? I don't want you to look back and say, day the Greek referendum no came out, I lost a ton of money. I'd rather you say, this was one of my first major fundamental events, and I took it seriously, and I focused my concentration on my trading like I've never done it before, and I'll always remember that I was calm, patient, disciplined, and I just traded with the market. I didn't say, that's the low and I'm going to long. You can't long this technically because it hasn't made a higher high. You understand? So let's consider this a high duress situation where a lot of traders are likely to lose some money in the next 24 hours. but not you. You might not, let's say you might not make a lot of money, but you're going to be there almost candle for candle, and you're going to trade it like a professional trader. This is your chance to shine, to stand tall, and be the trader that you want to be. Why wait for greatness? Why don't we start today? Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. And I will see you tomorrow at forex.today for our regular strategy session. I hope you're going to be there. Once again, thank you for being part of my team. You keep me strong. You keep me focused. I'm here for you, and I'm glad to see you every day. Cheers.